Yeah, very warm welcome. This is an important milestone in the journey of any company, and your company has done pretty impressively well, I would say. So we are going to keep it short, not very long.
Sure. Sure.
Maybe you can start with telling us, our readers, about the company, what the company does in very simple terms, and
Sure.
then we can take it forward from there.
Yeah. So we are a 4-decade-old company, well known in our industry, which is building material slash natural stone, and we are right now also operational in Quartz, which is the foundation mineral for same building materials as well as solar glass. And we are all pivoting into heavy mineral sands, which is again a mineral feedstock for titanium. Any titanium pigment you see, white color you see, or the metal titanium, and monazite, which is again a mineral feedstock for the rare earths, which form the permanent magnets. So it's pretty much the spectrum we're covering. Now, our DNA of the company is pretty much acquire the resource, develop the resource, which is strategic and usually unorganized. So we would take pride in saying our DNA of the company is being an organized player in unorganized sector. That has worked well for us in the black granite space. That is working well for us in the quad space. And when we go to HMS, it is more than unorganized business. It is an unorganized market. When I say unorganized market, the market or the supply chain is controlled 90% by one territory, and to ensure India's requirement security was when we started this journey a couple of years back. So that is where we are, and pretty much now we can delve into more detailing wherever you want to take it.
So yeah, it's very important. Very interestingly, you mentioned about rare earths and also quartz. So maybe we can talk a little bit about the industry applications and how the market is going to pan out, let's say 5 years down the line.
Right. So in terms of quartz is a mineral which is available in India in a few states. We are blessed with resource in Rajasthan, Andhra, and Telangana. We as a company have acquired resources predominantly in Andhra, the state that we operate, and we feel that maximum tailwinds in the solar glass industry are going to happen in and around where we are. So the quartz mineral is a pure form of silica, and it is used in any glass you see, whether you see automobile glass, whether you see a glass to drink water, as well as the solar glass. Now, obviously, the purity of the glass, which means the lesser the impurities, the higher the value, and the applications change. So, for example, a glass that you see in automobile could be 800 ppm. When I say ppm, it is the iron contained. When you go to solar, it goes to 100 ppm. When you want to use in semiconductors, they need 10 ppm. So the mineral is the same. Now, to extract or process that mineral to that clarity or that purity, it is a process and process engineering which is required, which our company has experted. So, in an integrated way. So, we own the mines, we don't buy the ore, we own the plant, we own the technology, and we cater to these industries. Right now, as we speak, we are catering to building material industry, which is used in engineered stone slabs, quartz based engineered stone slabs. It's a global market. We're catering to solar industry, and in future, our aspiration is also to cater to the supply chain of semiconductor industry once a lot of industry comes within the country. So we are trying to solve the supply chain of strategic materials which are important for the country, which we are otherwise importing today. That is on the quartz side. And in terms of market, so one is solar glass is a domestic market, and it's expected to grow at 30% CAGR because most of the glass is going to get substituted from Chinese imports. Indian government wants that is in line. The policy is in line, and building material industry, quartz engineered stone industry is growing at a CAGR of 11-12%. And we being one of the few organized players in this sector, we will have an advantage. It's a global market also. Engineering stone is produced in close to 40 countries, not just India. So it's export market also for it, and we are closer to the port. So that is about quartz market potential and all that. And in terms of the rare earths, rare earths is where the maximum tailwind is happening because the crisis we are seeing today. But on a long term basis, where we see this is one, the prices of the rare earths which are indexed by China. You can look at two important rare earths which the world is after. It's called neodymium, ND, and presidium, PR. So these are the two elements, rare earth elements, which go into making permanent magnets, which are feedstock for EVs, wind turbines, MRIs, defense applications, wherever it is. Now, when the world is getting choked on this, the problem is we don't have access to the monazite itself, and that monazite is giving these oxides. So the rare earth oxides. So one, we see the index price today in China is close to $65-$68 per kg, and that index is defined by about 6-7 companies. We feel that the prices will go much higher than that as a company. If you look at 2012, when there was no crisis, the price was $110, and to vet that, US government has announced last year that for rare earths produced within US, they're willing to pay double the price, $110. So I think that is the direction. Acquiring the resources is becoming more strategic than the cost. And I think in that journey, when China may benefit with higher prices, it may be good for overall health. And the second part is there is no rare earth available much outside the Chinese ecosystem. So market is basically what you can take right now. I think that is where we are, and hopefully we will be able to execute these on time and as early as possible, extract those important materials, and then based on that, hopefully there will be downstream permanent magnet industry and motor industry coming up in India. That is the whole strategy.
Got it. Okay, couple of questions on this. You talked first. You talked about uh, rare earths. Uh, isn't it that India has also got reserves? I understand when you say that not much of rare earths are available outside China. But where do you see the industry going in India specifically, and more on the exploration side?
Right.
I believe you are much into processing side. I'm more interested in talking right now about the exploration
Sure.
side.
Sure. So first, I would like to correct that China imports close to 80% of the monazite into the country, and they process it. Okay. They have feedstock, but not to the extent that they can. All the world's motors cannot be made with just the monazite of available within China. So China imports from a lot of countries the raw monazite and then process it. Our company, like we own the ore in granite, then we get into material. We own the ore in quartz. We get into material. Same way, we own the ore as a company.
Okay.
In Sri Lanka, we own the ore and we develop it. Now, what has happened in India? Why we even had to go to Sri Lanka? So in India, we are blessed with these resources, but historically, only government agencies were permitted to operate them. So it's only IRL, Indian Rare Earth Limited, KML, Kerala Mineral Limited, who are operating these mines for 20-25 years. And there was no private enterprise. Hopefully, that government will open it to private sector in medium term, and we will be in position to take whatever opportunity comes in India also. But we don't wait. As a company, we never wait. So we knew that this is a sector we want to be, and it's very exciting. And we saw this 2 years back, not now. And we went and acquired this resource like a Chinese company or a Vietnamese company does. Go outside your comfort zone or your territory, go acquire it, and then and Sri Lanka is a very comfortable place for us because we have been operating in Sri Lanka for the last 20 years. We have a manufacturing plant there, so we know the territory very well, and we're very comfortable there. And it's the closest proximity to India. So
Okay. Also, let's talk about the technological possibility of rare earth free permanent magnet free motors, etc. Do you see that as a major threat, or yeah, your thoughts?
So ferrite magnets, they're called basically ferrite magnets, and ferrite magnets are well known to the world, not know for the last 30, 40 years.
Mm-hmm.
The largest investment, the largest pivot that was done by any major company is BMW. They experimented with ferrite magnet into their EV ecosystem, I think 6, 7 years back, and they could not commercialize it. So what happens is, what we need to understand is, permanent magnets are made of rare earths, and the challenge has been not the price but the access to them. So a lot of companies have tried that, but wherever you need high torque in a small area, right, that is where permanent magnets work beautifully. So if you don't have a limitation of any space, you can build as much big motor as you want, and you don't need a very high torque. You can accelerate and decelerate at a reasonable pace. Then there are alternate solutions like ferrites. Now, obviously, the user experience in EV is as equal as the application, right? If you're going to make a product saying that due to these limitations, I'm making it bigger and less torque, will the product have a market? So that has been the challenge of the industry. The second aspect is, I mean, there could be companies who make these, but nothing is commercialized as of now. In the future, technically, it has its own challenges. There could be no new materials coming into the space, which the world, a lot of companies are working on. But it's very important to understand, rare
Mm-hmm.
earths are critical, but not expensive. So when I'm making the statement, I would like to give you a rough approximate unit economics of rare earths. Let's take the most price conscious product in the market there, which is a EV bike. Okay. Now EV bike is going to cost you 1,40,000, 1,50,000 rupees retail. The cost of the motor, EV motor within that will be around maybe $100, 9,000 rupees,
Mm-hmm.
right? Whether you buy from, whether the TVS or Hero buy from Sona Comstar or import from China, let's say 10,000 rupees approximately. In that 10,000 rupees, the cost of the permanent magnet will be 4,000 rupees. In that permanent magnet, right, the contained rare earth oxide, which I told you, ND oxide and PR oxide, will be hardly 1,500 rupees. So you're looking at current index price of China, what I'm saying. So you're talking about a 1% BOM cost, without which I cannot make the product. That 1% becoming 2%, I can pass on the price to my customer at that 1%. 1,500 rupees will not make a big difference. For that, if I have to
Mm-hmm.
change my entire technology, the structure, the casing, the design of the vehicle, bigger motor, and lesser compromise on certain technical aspects, will I do that? So the first option is, use a technically superior material, address this problem of having access to the, at least the medium long term, and then set your supply chain right. Obviously, if you have no option of doing it, then maybe the manufacturers will push to a different direction. But luckily, in India, we have access to the resources. It's only a question of developing them, and as a company, we are addressing that problem. And overall, EV space also forms only 28-29% of the permanent magnet business. There is MRI. So when you sit in an MRI, the entire casing that you see around you, right, that's a housing made of permanent magnet. And the wind turbines, which are the larger ones and rotorless, because you don't want noise on wind turbines, which are closer to villages, you have to use the permanent magnet. Then defense uses a lot of permanent. So a lot of other applications are there. As simple as your airport, there is a small permanent magnet in that. Now you can't make an airport larger, no? See, the whole direction of the industry is miniaturization. So I think when variables come, it becomes even more important. So I don't think we can live without the rare permanent magnets. The applications can change, the volumes can change here and there. But I think we should take the problem head on, see what can be done, and then get that supply chain. I think that's the best option we have.
Wonderful. So, you have enumerated a lot of other applications. I was, honestly speaking, I wasn't aware about all of them. I knew about the EVs and several other things, largely speaking, motors. But okay, so given all this context, where do you see how do you see the market growing? What's the growth rate of this industry?
So the growth rate is overall globally is healthy. But I don't know the exact number there, but the growth of EVs, your defense applications, your winter green energy, and your wearables, your devices, everything. So it is a healthy number. But what is more important is the growth number which wants to be secure by themselves, so not choked by the supply chain. So I would not name any country, any company here, but I would say this is the problem of the world right now, how to become self sufficient, self reliant. Now if you look at that growth number, it is going to be very very big, because today we're starting at a very very low base. So entire world's production of this, rest of the world is coming to a single digit. So you can understand that number, right? So any country which wants to develop these ecosystems down the line will need access to this material. So I don't think we are looking at that number at all as a company. We're just taking our small steps and moving forward. As far as we are concerned, the gap is still going to be huge even after we commence a production.
Great. Wonderful.
I'll just
So
give an
we
example.
talked
I think in this space,
yeah.
if you want to read a bit more and users also to get a better understanding, there are two
Mhm.
listed companies already outside India. Obviously, no private enterprise in India. It's called MP Materials, listed in NYSE, New York Stock Exchange. Look it up. It is having rare earths access in US. And Linus Rare Earths, which is listed on Australian Stock Exchange. They operate in a few countries, and they are pretty much doing what we're doing. One is a 12 billion market cap dollar company, other one is a 20 billion. So that gives a lot of public information on what those companies do, and where the prices have been going, what is the market looking like, and they have a lot of tailwinds in the last 6 months. All these numbers, what you see, because of the crisis that we see now.
Right. Fine. Let's also talk a little bit about Quartz business. Uh, there is a lot of talk, obviously, about this engineered marble and all these things. And so, if you could just throw some light on this business
Sure.
segment. Yeah.
Sure. So if you look at the entire building material landscape, which is basically your floors, countertops, windowsills, platforms, your cladding and all. First, everybody thinks of it this ceramic, which is starting off at a very affordable price, and that is where you begin. The next upgrade would be your granite. And in granite, black granite is more premium. The next upgrade would be your engineered stone, quartz engineered stone. The next upgrade would be your imported marble. This is pretty much the value chain or the pricing in terms of this thing. So engineered marble is in a sweet spot in terms of not being too expensive. At the same time, they copy all the exotic stones. You look at Italian marble, which is unaffordable, let's say 1,000 rupees plus a square feet. People can get it at 400-500 using engineered stone. So that's pretty much the business model. It has grown very, very, very healthily. It's a large market. As we speak, it's close to $5 billion annual market globally. And India is having almost 50 plants producing this engineered stone in India.
Mhm.
And globally, there are about 200 more. If you don't consider China, China has another 300 plants manufacturing this. So this product, there are two main raw materials. One raw material is the quartz grit, which we are supplying. The second one is resin. So this, which is a petrochemical product. So so we are in the supply chain of the engineered stone slab, where we are supplying the quartz grid to the engineered stone industry. So it's growing healthily. It's growing at 11-12%. The rest of the world, in US, it's going at 7-8%. And India is a fast growing market. Middle East is a fast growing market. And the problem of the industry in India has been branded large scale supplier for quartz, which we're trying to address. And it's mostly export oriented. So companies are usually doing well, and a lot of countries import this product. So I think that is the industry we're trying to address, which is integrated into what we traditionally do, a building material industry with granite, catering to a quartz industry.
So, in the quartz business, who are your competitors?
So in terms of the powder, there is a Sibelco, which is a multinational having presence in India. They produce a grit like us. And there is Chettinad Quartz, which is a part of the Chettinad cement family. They produce quartz grid, good quality quartz grid. And then there is Vinayaka Microns in Rajasthan, which do the same. And our difference is we are backward integrated with large mines, which means we built a large plant close to 300,000 tons per year throughput, whereas the combined capacity of all the three could be that. So rest all are small scale, fragmented, mine operators or a small plant operators. So we spent close to 125 crores in this plant, out of which 45 crores is just QA QC, just sorting of the grains for quality. I think in terms of quality, we are at a global level. And in terms of volume, also we are on top five globally, and we are doubling. So from 300,000 from the proceeds of the fund from the IPO, we're investing around 120 crores and doubling the capacity to 6 lakh tons. And the tailwinds, the engineered stone market is healthy, but the tailwinds are coming from the solar glass side, because the same size of quartz is used for solar industry also. So once the sizing is done, we remove the iron from the byproduct, and that goes into the solar glass industry.
So I guess in the solar side of the business also, there are very few competitors for you. I think Borosil
Yeah.
is one. I think it was the first one.
So Borosil is a potential customer. So Borosil makes glass. They need this powder to make the glass.
Okay.
So traditionally, the glass is made from a mineral called silica sand. Silica sand is also a natural mineral. It is in the form of sand. We produce this from quartz. So quartz is a purer form of silica. In the mine, you get 99%. Silica sand is 90 to 93%. So whenever you want to make purer glass, which will give better radiation going onto the panels, and that is where the industry is headed. That's where China is setting the benchmark in terms of quality. It was 140 ppm. They're saying 120 ppm. Now they're speccing at 100 ppm. Tomorrow they'll say 80 ppm. And semiconductor is 10 ppm. Those are impossible to make, from literally technically impossible and challenging and highly costs involved, because you're doing acid leaching, chemical washing, and chemical process from silica sand, because the purity is 90 to 93%. So when you're starting at a raw metal 90 to 93% and you want to go to 0.01%, right? It's challenging and a lot of costs are involved. When you're starting with 99% purity material and you want to go to 100 ppm, it is much easier and cost efficient. So our entire products are based on quartz, not any silica sand. So that is the major difference. So we'll be setting the benchmark in terms of quality of grit available for the glass producers, and they can produce all high-end applications like your solar glass or anything tomorrow, even for semiconductor industry. So we are trying to we are addressing the supply chain side of it.
Got it.
Yes, and as we speak, there is no major player in India doing this from quartz like we're doing. Yes.
Right. And are there players doing it on the silica side?
Silica sand, a lot of people in Gujarat, and entire solar glass industry today is run on silica sand. And the problems that I have mentioned is what we just discussed a few minutes back.
Right. So
we as a company see that the quality norms are going to be more stringent in terms of requirement. And once we are getting a better quality 80 ppm, 100 ppm out there, then a lot of glass will be supplemented with domestic, because China is already producing that quality glass. And the key to producing higher quality glass is higher quality silica.
Right. And how difficult is it in terms of pricing power? Do you have full pricing power, or there is usually a pushback from your customers?
So in terms of engineered stone for quartz, the price, we have decent, we're expecting decent margins. So, and it's a quality conscious market. So better quality will give better price, and customers love it actually. They don't mind paying better price for better quality. In terms of solar industry, is more price conscious industry because energy is the number one cost, and they already are running at thin margins. So that we need to balance. So if, for example, 120 ppm product is available at, let's say, 5,000 rupees or 5,500 rupees, what will the customer pay 100 ppm? That's a discovery. So our initial customers are paying a premium, and how much is that at scale is something we will know in next few months, but we have a decent premium over silica sand as of now.
Okay. All right. And in terms of the cost component of this quartz, in the finished good, how much
Right.
would that percentage be, typically speaking?
So the end customer is going to be, let's say, a module manufacturer, right? In the module, you're talking about the solar glass, the glass which
Right.
comes on top of the panel. Now that glass can be two varieties. It's a monolayer or bifocal. When you look at bifocal, instead of one 3.2 glass, you may have to use two 2.5 glass, which means 5 compared to 3.2. So then the volume also is increasing. So typically, depending on mono, bifocal, the cost of the glass to a module manufacturer can anyway be between 7 to 8%, can go all the way up to 13-14% of the module cost.
Mhm. Okay.
Now,
Okay.
in that glass, the quartz, right? Could be another 70% of that number.
70%, 70.
Yeah. So, for example, sorry, 70% volume. So overall cost could be 28%. So 25%. So energy and quartz. So energy could be 28%, and the silica could be 24 to 25%. So which means on a module space, you're looking anywhere between 3%
Mhm.
to 4% of the quartz as a raw material at X factory value, if you compare it to module cost.
Okay. So this
But in
becomes.
the solar ecosystem,
Mhm.
uh, glass making, the glass, according to us, is the lowest hanging fruit, because glass, all you need is energy and silica and continuous furnace. There's not much and a capex. So, but the other elements could be more tricky. Your panels and all, there could be more technical challenges in making it. So I think glass is the first one to be totally
Mhm.
indigenized in India, is what we believe.
Yeah, right. Yeah, there is a lot of investment also going on the glass
Yes,
side.
yes, yes, yes.
Also, I think there is a lot of chatter in the industry about the excessive capacity building in the solar side. So that
Right.
includes not just glass, but panel manufacturing, which is not really something you should be directly concerned with. But I'm just interested in picking your brains on this. How do you process this situation, the current market situation?
Frankly, I don't think anything is excess, right? So in that case, China is what? Super excess. So I think what we need to understand is, when we believe that we as a country want to, and first we need to believe world is going green. Okay. If that first thing is answered, the second thing is, if we want to be the top one or two players, let's say the top player manufacturing these panels or the ecosystem of solar in India, then there's nothing excess, because the way the market has evolved, right? The volumes have brought the cost down. And if you are not, and history has shown us, per megawatt solar EPC guy would have spent 6-7 crores just as early as 5 years, 4 years back. Today we're talking about 2 to 3 crores, right? That has all come from scale. If you're not able to build scale, and I don't think
Mhm.
we should define a number that this is the market size, because world is a marketplace today, and go all guns and produce as much as every company or the nation can. I think we will be preferred supply chain to the world, and at a reasonable cost. I think that should be the pivot right now, because no number can, no, I mean, every number is debatable here. The idea
Okay.
is, are you the lowest cost producer in the world? And that comes with scale. I think that is what we need to develop.
Okay. All right. Got it. Also, let's talk about financials here. Your return ratios have been quite impressive, but I also noticed that they have been uneven. So in 23, your return on capital employed, which is, I think, one of the most important metrics to track, was around 14%, slightly over 14%. Then it
Right.
jumped to 25% in the next year, and then it came down to 18%.
Right.
Uh, why this kind of sudden movement, erratic movement in return ratios?
So one is the capex cycle, because we are depending on a lot of earth moving equipment, and there's usually a cycle to that. And the second is, but if you look at last the 27 to 18 is specifically because we have built this new plant with a capex of 125 crores, and that is reflecting in that reduction of the ROC. But this plant is built, and we have this plant is good for next 20-25 years. Then only the when to the second phase again 120 crores. We may have that. So I think as a company, we are on the growth drive, and margins are intact, and most of the margins are coming from one-time decisions that we have taken, like converting from energy from diesel to electric trucks. We are on that journey. So things like that. We at our size can upfront that capex and build that electric infrastructure. And for us, we sweat the vehicles. So that is another capex, right? So into a third, when we started the journey of converting diesel trucks historically 8-9 year old to electric, that's upfront capex also which comes in, and but they pay off. They pay off very fast when you're sweating the vehicle. So I think our core focus is on the margins, and since we are starting from the source, the ore or the mine, and going into materials, we have control on a lot of aspects on costs. We don't have to buy any wrong from other people unless we feel it is attractive. So I think, given that, I think that's where we are, and we are confident that we can continue those numbers, and maybe our strive is to better them.
Okay. All right. So that there is a fine element of guidance also on this. You believe these numbers are defensible. You are going to continue on these numbers.
We're confident, yes. With the new industry adding, in fact, I'll just give you a number, right? 27 EBITDA is a good number, but if you look at the listed peers, which I just mentioned earlier on the show, working in there's a company called ILUK, which is doing heavy mineral sands operation in Australia. Their EBITDA margins are in 40s. So I think our strive is to do our best, and we are comfortable where we are, and hopefully we'll do better.
All right. That sounds pretty good. Just one more thing. Let's talk about mergers and acquisitions, if there are any such possibilities. Do you see such possibilities in India? Or there are some peripheral opportunities, maybe on the materials side, maybe on the equipment side, technology. Yeah.
So in the first vertical, natural stone, we have been consolidating historically. Whenever we see nice opportunity and mine next to ours or something, which is, we keep doing that, and that doesn't end. But these are all not big ticket transactions. When it comes to the quartz, right now where we are, we have enough resource, we have enough capacity, we have enough technology, and we are right up there in terms of what is available globally. So I think we are good there. There'll be some R&D internally. We'll be working with some labs. We're already working with a German lab in developing high purity silica. So all that will keep on going, but it is an internal R&D. It's not coming from M&A. And on the HMS, again, we have enough feedstock. The plant that will be built will be an EPC, and the EPC could be from India or China. Being in Sri Lanka, being where we are, it is we can do it is a basic cost benefit analysis. And the further processing of monazite to the oxides whenever we want to do that, again, we've already started that process of developing that internally. So I think our usual way of doing things are, we get the best teams, give them time, give them the funding, and develop things at lab scale, pilot scale, then commercial scale. What that does is, since we're trying to do things that are usually not accessible globally at competitive scale, right? Because those are strategically held by a few companies or a few territories. We can still get access to them, but it could be a 2-3 generations old. So when you're talking on something which is 2-3 generation old technology, by the time you commercialize, you will still have those inefficiencies. Okay, today market is good, people are paying premium, all that is working. But I think internally we'll have to get that thing, and our organization is well known for that. So we are innovative as a company. I think we're comfortable doing it. But given that, whenever we see something interesting, synergizing, we will be bold enough to do any M&A that comes, which is fitting into our DNA.
Right. And that includes overseas as well.
Overseas see, you need to understand the model of our competitions out there, right? They acquire resources globally for the security of their country, right? So these resources will have to go where they are there, and obviously there is a risk reward ratio. There is, you need to evaluate the risk. We do all those boxes checked. When we think everything is good, we'll go wherever to get things to India.
Got it. All right. I'm through with my set of questions, Mr. Kollareddy, and I thank you for your time.
Thank you so much.